Pros and cons that most people do not talk about with indexed universal life. I'm going to be as transparent as possible. Make sure you save this video and make sure you're following. And first up, we're going to go with the pros. Growth potential. Linked to the stock market indexes. IULs can offer substantial upside growth. The downside protection. Downside protection is basically your safeguard from direct market losses, which means there's a 0% floor there. When the market grows, you grow with it. When the market tanks, you stay and do not gain. The loan provision. And the loan provision is pretty solid because if you want to be your own bank and you need funds, the IUL policy will let you borrow from your cash value, essentially being your own bank. The tax-free income benefit rider, the income at retirement that literally lasts you forever, and it's typically better than your 4% rule. Now we're going to get into the cons. The complexity of the IUL, these policies can be extremely tricky to understand, and many agents, and there's a lot of agents on TikTok, Instagram, and Facebook who say they understand how to structure the policy correctly. They don't, and they usually end up screwing 90% of the clients. I quote high costs. This is what most people are going to tell you. In fact, if the IUL is properly structured and with a company that specializes in an IUL, these costs can be very minimal. Again, this falls back on agents and them using companies not specialized for an IUL. Some indexing strategies have a capped growth, like the S&P 500, but there isn't just one indexing strategy. There is a giant array of indexes. Some of them actually have zero cap rate. 9 out of 10 times, people who get IULs with other companies or other agents, they come to me and ask, they switch because they got screwed over.